Welcome back to the Opportunistic Trader. It's 10 a.m. and I'm lucky enough again to be joined by Tony Greer from TG Macro, talking individual equities and the market in general. And I'm going to leave it open. Good morning, Tony. I'm going to leave it open to you, and then I'd like to discuss your thoughts on a number of different issues. So
Sure.
you're up.
How you doing, Larry? Thanks for having me. First of all, it's always great to be here. It makes me collect my thoughts accountably if I have to present them to somebody. You know what I mean?
Absolutely.
Um, so
Absolutely.
I guess what's jumping out at me today is that I guess what's ringing in my mind is hearing Stan Druckenmiller on the Real Vision interview say something like, we don't know which rate hike it's going to be, but one of them is going to eventually start having a material effect on markets. So I've got that ringing in my ear, and I looked and see, the small cap stocks. The Russell was off big yesterday. So I'm wondering if this isn't the very beginning of, small cap stocks and micro caps, which have been a huge leader in the market, pulling back. But so far, they've just, reached sort of, through one initial support level. And like if I look at IWM, it's backed off below the 50-day, and now it's below the 100-day. And we'll see if it does retrace all the way to the 200-day moving average, because then at least we'd have some sense in the market and say, okay, higher rates are actually going to slow down growth a little bit, and the small cap stock should suffer. So that would be something that would be a sort of a nice logical treat. But I guess there are some still good trades to be had. We nailed the bottom in copper at 5,800. I was definitely talking about that here on the show. That was the 50% pullback of the move from like 4,000 to 7,000 or so. And we saw funds getting short into that price. So copper held down there and is now rallying above 6,300 on the LME. We're seeing strong commodity prices. Gold's even caught a bid back of above 1,200. Crude oil took another leg up behind Brent because we've got bottlenecks all over the place. And, I try not to fade those dynamics. I've been bullish energy. That's working out today fairly well. Bearish builders is still a good trade, and bearish social media is still one of my favorites. I'm just waiting for this plain vanilla bid at $160 to get out of the way in Facebook. There's a mutual fund buying it there like a ding dong. And I'd love to sell them all the stock because I think that stock is going much lower given what we know about Facebook. And I think that kind of wraps up the world in my eyes. Larry, what are you looking at?
Well, I've been looking at a lot of divergences. You touched a little bit on the Russell. We discussed before we came on the air, Russell S&P had its widest day in many, many, many years. At one point, the S&P was up 20 handles with the Russell down a percent and change. So, I'm looking at that, and, for people that are shorter term in nature, the whole key on a day over day basis is watching NASDAQ, S&P, or Dow NASDAQ. It's the weirdest thing. It's almost just like every day is an allocation trade. This morning it came in, NASDAQ was down about 7. It went down to the lows of the day, which were down about $32, and then the S&P didn't even move, and now the NASDAQ went positive, and the S&P still didn't move. So, watching those type of things, I have my eye on Facebook. It's actually trading at 160 and a half. Got down almost to 160. Like you said, there's the invisible man bidding, whoever that is, at 160. But again, if we get into the middle 150 handles, I mean, that means everybody that's bought Facebook pretty much for the entire year is down money. And that creates a different dynamic than we've seen in general in those names for years and years and years. So, I'm looking at that kind of stuff. I'm, looking at commodity prices in general. Gold exploding up $18, probably its best day in months and months and months and months. I mean, not out of the range of where it's been, but it looked like it was going to test that overnight low at 1175, and it didn't get down there, and now it's safe. But on
Today,
the
I think the gold, Larry, while we're on gold, I just want to touch on it. What's going on in gold today is that there's buying, as you see, we've got pervasive euro weakness today, right? With the Italian situation, right? We've got populists that are going to take over the finances there, and they're going to raise the debt to GDP ratio, which is going to cause a little bit of a battle with Rome. But what's going on is they're selling the euro on that. They're selling the euro against everything. And one of the things they're selling it against this morning is gold. So if you look at the price of gold in euro, which is roughly 1043, that price just spiked up through the 50-day moving average. And I think that's why gold's got a bid to it this morning.
do you think it's geopolitical stuff, or is it currency related? What do you
Yeah,
think?
I think it's currency market related. I think that there are large positions of gold in euro, and I think when the euro is being sold against all the other currencies, that it makes sense to me that gold would rally against the euro, and I think that's what you're seeing here today. And I think that's lend the bid to gold and dollars, and the same thing in silver. So that's really it. I'm still pretty negative in precious metals, pretty positive in base metals.
Yeah, the base metals have been taken off. You talk copper, it got crushed, annihilated, and now it's come back. Like you said, a significant amount of the moves. So it'll be interesting to see in here. Any thoughts on any individual names as far as any of these fangs you're looking at, or Tesla, or anything catching your eye?
Yeah, I mean, obviously cannabis names are on top of my radar screen. There was a textbook play that I played the other day. There were two consecutive inside days in Tilray, right, which is the marquee stock in the cannabis space. Obviously with the New York listing, and they had two consecutive inside days on the 25th and then the 26th of September. Now, if you're an old timer like me and you see two consecutive inside days in the most popular stock in the market, when you break the rule book says when you break the first extreme, so when you break through one of the highs and lows of those, of the inside day, you go with that. So when we broke through the 119 high of Tilray on the 27th, I bought some. I bought some at one. By the time I got filled, I was buying it at 121, and I held it, for the entire day, and wound up selling it on the close, at 131. So I made a nice $10 trade. 2 days later, the thing trades up to 175, Larry. You know what I mean? And it's just amazing because there's this follow through, in these names, and there's no logic behind this now. The valuation is totally unwarranted, but it is playing a game, and it's playing a trading game along with the rules. And those are the things that I love to trade. So I've got my eye on that. Obviously all of that. Tilray is taking all the attention from the space, which I think is good because it's going to shake out, some of the other names to a little bit more of a fair price. I'm looking to buy Kronos on a dip down toward $8. And the reason is I have confidence in this bull trend. So if I have confidence in this bull trend and, the stocks got all overextended on that day, Tilray traded up to 300 and now everybody's long at a bad price. The way I look at it is that they're going to have to sell their stock and they're going to lose face in the cannabis trade. And I'm going to get to buy things again, like Kron again, down at $8 or $9, and a chance to buy potentially Canopy Growth down at $41 or $42. And in a bull market, in a bull revolutionary market like this, I think that those are the best chances that you're going to get. You know what I mean? Like those are the chances that you get, like that are to me like buying the railroad stocks at moving averages when the US GDP is flourishing. So I'm really going to focus in on these. I'm going to put a lot of chips, in this arena, and really trade this area aggressively. And so we're going to continue with the bull trade as long as the bull story is intact. And I keep following Todd Harrison's lead on Twitter and at CB1. In terms of the information flow, I think that this is literally one of the best opportunities that I've seen in the market since I was having Amazon send CDs to my apartment in Greenwich Village, and I was downloading those to my Sony Walkman and going
Ah,
for
I
a run
love
around
that.
the park,
I
right?
love that.
And
Yeah,
yeah,
it's
and you had an opportunity to trade those stocks right in front of you. And now you've got these right in front of you. The beauty is there are as many skeptics as you care to speak to. You know what I mean, Larry? So
oh
that's why
yeah.
I'm like over my, I'm obnoxiously bullish this space because I am confident in the science from the people that I've spoken to. And when you feel like you're still, in the zero or first or second inning of a revolution, you trade it with confidence and the trades work out. So
Yeah, but it's just it's funny. I know you're bullish in the space, and I'll just say, I don't really have an opinion. I was in Tilray down, at $100, and it's now 100. Like you said, it got to 170, but holding it down at 102, didn't feel so great. But my thought, just in general, is, you know, cannabis itself, I mean, anyone can grow it, anyone can cultivate it, and anybody can create the product, and the demand end user is pretty much defined. So, I mean, I don't know. As the
why?
companies pop up,
Why is it defined?
well, it's defined to the number of people that are going to actually use the product. I mean, you only have a certain population in the world.
What about what about if everybody that was on opioids transfers to cannabinoids?
Well, listen, I get it, but that's still, I don't know how many adults over a certain age are in this country, but maybe it's 200, you know, you know, in total, and I don't know how many people are going to use it. That's all I'm saying, and
Yeah,
I'm not, I'm not debating it. Listen,
yeah.
I'm not saying the valuation at that level could be, construed as cheap, but Tilray is what, 13 billion, 12 billion, 15 billion? I
Oh, it's
mean,
absurd. Yeah, it's absurd. Tilray is the poster child for high frequency trading. In a thin market that is going to have obvious, waves of buyers and waves of sellers that they can front run, and that's why you have the stock have $150 range. It's not because it looks like Bitcoin, and it's not because it's a bubble. It's because there are high frequency traders in there that are front running, the very beginning of institutions trying to position in these names. And when I say the very beginning, it's because there are only a handful of funds that are focused on trading them, and there are obviously going to be tons of day traders in them because they're volatile. But when you have, we're sitting here trading these stocks like day traders, that's fine. And then Coca-Cola comes out with a headline, that they're going to partner with one of the companies and turns over the calculus in the space.
oh,
So now,
listen, without a doubt. I mean, listen, it's the hottest space. People want to be there, and I understand it. But I don't know. To me, it's not like
so here,
creating. It's not like
I think
creating a
I think a
drug.
good way to put it. I think a good way to put it, Larry, for me is, as the calculus trades, as the calculus to the cannabis trade changes, right? And Coca-Cola steps into the arena, and then we're going to have a food processor step into the arena, and then we're going to have a cosmetics player step into the arena. And then all of a sudden we're going to turn around and one of the cannabis companies is going to buy a U.S. beverage maker, and everything is going to get turned on its head here. So my point is just like, the wider the picture changes and the more complicated the calculus gets, the more longevity this trade is going to have.
Right. No, and then listen, I'm not disagreeing. Like you said, we're in the infancy of the trade, and there's great opportunity on it, and you've been all over it. What I just want to shift to
Yeah,
home
shift gears.
builders.
Go ahead, do whatever.
Yeah, no, I was just wondering your thoughts on home builders. I know you caught that, and I think rates are obviously still going to go higher in here. Do you think that'll have more of an impact, or you think that's priced in at these lower levels? What's your thought on the positions, as
I
we
got
speak?
excited for the first time in a while to be short home builders. And as you know, this is a position that I've had on that's kind of growing hair on it, but it's also starting to pay me. I'm interested that the consumer names within XHB have been rallying, and the index, the ETF itself just broke to a new low range for, the last 4 or 5 months. So with XHB under pressure here, I feel like if Lowe's or Home Depot or Williams Sonoma ever turn, south, XHB is really going to pay me. So I'm hesitant to take this position off. I am going to be careful if I see it trading back up towards 39, 39 and a half. I may just get out of it because I'm nervous that, it's kind of on everyone's radar. They've all been beaten down. You're starting to see sort of, on the cover of CBS Market Watch, are home builders cheap here? So it might be time that there's a little bit of a bounce that I don't really feel like sitting out. Overall, I still think that the whole entire builder industry is going to be in trouble with higher rates now. I'm still, the 30-year is still right at the top of the range. But I'm sort of trying to stay a step ahead of it and say that this time, the 30-year is going to break through 320 and go to 350. And this time the 10-year is going to break 3.25 and go to 350 or 375. And the 2-year is just going to continue to chug higher in terms of yield. And that's what the market's grappling with now. Jerome Powell is not messing around, and I appreciate that. He's doing what he says and says what he does. He says what he means and means what he says, and he's out there on a plan to normalize rates, and that's what's going on. So I think if you're going to fade that, it doesn't make sense to me to fade the rate move when everything is being telegraphed and going along as planned. Now that I've got 30-year, yields back at the top of the range here, I'm going to play for them to break higher. So I'm going to stay short the builders now. So yeah, it's a tricky time to trade them.
How much are they down? From net on the year, in general, the home builder index and net up.
Yeah, well, let's look at it, Larry. I mean, Pulte Homes came into the year, at its highs around $34. It's $24 last. So it's gotten a full, 30% taken off of it, and it just traded down to the 2017 highs. And this is the level that I would be covering some of my Pulte Homes if I was short that particular name. I look at things like that, and I got to decide what I want to do with this as XHB position. But I do feel like the builders can go lower. Pulte Homes may have reached its target, but Lennar still has room. Lennar just broke down through its range, below $50, and looks like there's no real support until 40. And that's a $47 item, so there's room on the downside there. DR Horton's another one that really hasn't broken down at all. That's been rock solid, and the chart still says that it's curling over below its moving averages, so that home builder can back way off. So I'm still pretty comfortable being short builders, being short social media, and being long energy and long cannabis, and then a few other random names in between. But as long as these individual stories and these individual sectors are playing out, with sort of news flow versus stock reaction the way they are, I'm going to stay in these trades and keep trading these trends aggressively, because I think they can all continue, at least for the next quarter, if not well into next year.
Yeah, I think you're probably right. One other question. I know you've traded Twitter many times, and
Yep.
I know you've caught that. Stock's trading at like 28.35. Do you have any opinion on Twitter, or is it a no play? What is your thought?
It still looks to me, Larry, like this thing is going to be a full return trip back to the teens for Twitter. I really believe that. I mean, as much as I am on the platform and I embrace the information, I literally cannot stand the Twitter experience. And it's getting more and more divisive. They threw James Woods off of the platform. You look every single comment, every comment that's sort of liberal leaning has got a blue check mark next to it all of a sudden. And now there are, verified people with blue check marks and like 4,000 followers. And I'm trying to figure out what Jack Dorsey, is doing. But, Rudy Havenstein said it best on Twitter when he said, sometimes I feel like Twitter is being run by its competitors. And I just think that since he was sitting in front of Congress, that they've been doing an absolute horrible job of managing the crisis, of, crisis response. The stock just got buried from 50, right? It got halved and has not picked its head up since Jack Dorsey went in front of the Senate and said that it was a bug that was shadow banning conservatives, right? So, this guy's caught red-handed. The stock is suffering. It doesn't seem like he's got any kind of a game plan to level the playing field. And, eventually people will start leaving that platform too, which will be a shame. But it seems like the most, the toughest survivor on Twitter is definitely going to be FinTwit. These are guys that have come off trading desks their whole lives and are just out here to exchange information in an open forum. And if a couple guys get bloody noses on the way in and the way out, then that's okay. So FinTwit is probably going to, live through. And I'm guessing, Larry, that eventually another decentralized platform pops up where people will know that it can't be, nobody can be banned unless, there's some sort of a group response or something like that. But I think that there'll be a level playing field social media concept that crops up. Maybe it's something that happens on the blockchain or something like that. But Twitter is not going to be the answer in its final form. The same way that just to do one more allusion to the Stan Druckenmiller thing, he missed Apple because he was looking past the handset. He was like, he openly admitted, he's like, hell, I missed the Apple trade. He's like, I didn't think the phone is going to be anything. He's like, I don't even think the phone is going to be the thing, in 5 or 10 years. And, when that's the case, I can certainly look at these platforms and say that Twitter is not going to be the thing. Facebook is definitely not going to be the thing. And, keep your eyes peeled for what will be. But I'm going to trade that posture from a bearish, trade that sector from a bearish posture for sure.
Oh, that's interesting. I just wanted to give you a little kudos because they hit out the 160 bid in Facebook, and it traded down to 159.51, trading at 159.86. So that guy's so filled, but we'll see what happens. It's holding in here for now, and
yeah. Well, I think we'll know shortly if the guy that was buying it with a 160 top gets his count out and lets it trade for 5 minutes, and then sends the sales trader another 250K with a 160 top, and next thing you know, it's 161 bid again.
Exactly. Yeah. So, you can't get too excited at this point, but I just wanted to point that out.
Exactly. No, but it's got to trade through. It's got to trade through. And I think we're going well into the, low 150s before this year is over, if not 140. So
it's just an interesting, the trade to me is so mystifying because these EEM markets and stuff going on across the board. I mean, these markets are down anywhere from 1 to, 4%. In a day, and we come in and literally do nothing. I mean, we just sit. And so, something's got to give at some point. But
the rotation has been super aggressive, right, Larry? We had transport stocks, healthcare stocks, aerospace and defense stocks breaking out and running, into the end of the quarter. And at the same time, like you said, we had, emerging markets getting tanked, social media tanked, and a couple of other sectors back off while energy goes sideways. This is a very aggressive rotation. I think portfolio managers are trying to figure out where the, trade tariff story is going to shake out their sector. I think they're getting some of it wrong, that everybody just shorted copper into a hole and they're forced to cover. The energy stocks got beat up originally and they're coming back now. So, I think we continue to be in a really good trading market, sector by sector. That's how I look at it.
Yeah. And what makes you kind of special is you're able to see that and parse out great information to us, and we appreciate it. And,
thanks. Anytime.
I don't know if you want to add anything in wrapping up, but you pretty much covered everything for me. And, again, I appreciate it. And I
that I appreciate you giving me a chance to voice my opinions out here. I think it would be great one day if we had, have another guest on with an opposing view to mine, and I'd love to hear what they had to say. And we can go back and forth and stuff like that. That's what, when you work down on an exchange, those were, the conversations that you walked away from and took away something from, when you went toe to toe with a guy that's got an absolutely opposite view that you have.
Absolutely.
So if you ever think of it or come across someone,
you know what, I'm gonna try to get that going, and we'll pick it up. But I appreciate it.
Television,
Absolutely. Anyway,
cool, man.
Thanks for joining me, Tony, and we'll speak soon.
See you, Larry. Thanks, man.
Bye bye.